Inside the main markets and also the crypto market, there's something really interesting happening. It's something that you really need to know. Let's run the numbers. Just a quick piece of housekeeping before we get into it. Many thanks to all the hundreds of people who registered to get the Profiting from CTKS Method Structure course absolutely free. I'd like to thank everybody for their comments, and I'm integrating those questions and comments actually into the course, so the course will be delayed. I'll keep you updated. Now, let's get into it. Hi everyone, I'm Ken from CryptoTradingKS and the CTKS Method. If you're new, a very warm welcome. And welcome back, CTKS family. What I've just been showing you is the inverted VIX. It came down when the Japanese carry trade, or the curry trade, unwound. Gave us all indigestion. We saw a lot of pullbacks when that occurred. Unfortunately, the VIX is starting to spike again. The reason that I invert this is to show you the directional correlation between the VIX and the major indices as well as Bitcoin. Another thing to note is US liquidity. A lot of people talk about global liquidity, but there's a problem with global liquidity. There's a couple of countries out there that just turn on the fire hose and, unfortunately, just turn it off again. That creates statistical distortions in these kind of indicators. US liquidity is pretty representative of what is happening right around the world. And what we've seen just recently is a divergence from US liquidity, which is coming down, and the stock market and also crypto. Typically, we're not great fans of US liquidity going downwards because it could foretell turbulence ahead. But if you know how to trade, that's absolutely not a problem whatsoever. All we need to do is to make volatility our friend, and things like this are no big deal. One of the things that we've noted, and it's probably because US liquidity has been coming out of the main market, the VIX has been spiking. So far it's spiking, and we need a retracement back to see further upward momentum in the S&P 500 and also the crypto space. I suggest that you keep your eye on the VIX. It's actually important, and there's a way that you can look at the VIX without looking at the VIX. Ken, what are you talking about? I'll show you. The VIX is the volatility gauge of the S&P 500. So how it works is like this. If the S&P 500 is coming down, the VIX is going up. It's pretty simple and straightforward. And typically what the S&P 500 does, all the other major indices literally around the entire world do the same thing. So these markets will give you an insight into what the VIX is doing, because the VIX is really lazy. It only wants to trade in US hours. How could it? One thing that you will find, markets do dephase from time to time. You will see up movements over-exaggerated in something, for example Bitcoin, and down moves under-exaggerated. Up moves over-exaggerated, and these create these kind of parallels, but they typically don't last for too long. And actually, if we scoot in a little bit and we see that Bitcoin is actually following pretty much what the S&P 500 was doing, not all the time, but you can see this upward movement was over-exaggerated. Then the downward movement was over-exaggerated. Up, down, all around the place. Don't forget, it's not a 100% relationship. It's a gravitational relationship, which means it pretty much wobbles. When looking at the main markets, on the close of the market we saw the VIX unfortunately coming up. That threw a bit of negative momentum inside the major market indices as well as inside crypto. We also saw that the yields were coming up as well as the DXY, and of course that put a lot of negative momentum inside the commodity space, and gold got hit. It's useful to remember that every single market has gainers and every single market has losers. The upper bank, storage in file and distributed computing, is doing pretty well, and SUI is down on the lower bank. But what you will find is that all of these alts follow Bitcoin's gravitational pull. If Bitcoin is coming down, The alts are coming down. They can't escape the gravity. And if we get a big sell-off, guess what? The alts will sell off. And if we have a big spike, guess what? The alts will spike. That's why it's critical to know what Bitcoin is doing, especially its structural levels. Bitcoin is the undisputed king of the crypto space. When Bitcoin is going up, it will drag the cryptos up with it. If Bitcoin is coming down, it will push the cryptos down with it. And we saw some really interesting things. When you look at Binance Coin was an absolute outperformer. You may think that this gravitational pull has actually lessened. It's actually untrue. It's still moving with Bitcoin's gravity, but it's just a little bit harder to see it. If I just zoom in a little bit closer, you can see it right here. What you will see from time to time, the alts will vary from what Bitcoin does, but that's all part and parcel because there's always different events that impact specific projects. But overall, they cannot escape Bitcoin's gravitational pull. For example, have a look at Solana, have a look at Dogecoin. Dogecoin came down, Bitcoin went up, Bitcoin went down, Dogecoin followed. What about XRP? You can see it pretty clearly. It's very important to understand what Bitcoin is doing. And this is total crypto market cap. Total crypto market cap means the market capitalization of every single crypto project out there. You can see they're very closely associating with Bitcoin's price direction. As part of the new course, Profiting from CTKS Method Structure, I'll be releasing a number of new indicators. They're indicators that I use to inform my trading decisions. And one of the ones that I use is Bitcoin institutional sell pressure. You can see throughout this entire day, the institutions have been busy at work, just flogging down the price of Bitcoin. And some other good news is that the Profiting from CTKS Method Structure is available absolutely free if you fill in the registration form that is in the link of the description of this video. Of course, there are conditions that apply, so you just must meet one of those conditions. If you do, you're in, and $600 you don't have to pay. It is absolutely free. And we can see right at the current time the institutions are going a little bit bananas. They're selling off. We know that the crypto market is wildly dependent on Bitcoin because if Bitcoin sells down like this, pretty much it's dragging every single alt down with it. Therefore, we must know the structure of Bitcoin because we need to know where the structural support levels are and the structural resistance levels are. Through the service on ctksmethod.org, you can get this indicator. Now, what are we seeing right at the current time? The price is literally just under a structural once support level, but it's looking very much like a resistance level. Now, what happens if we lose this? It means that we're coming down to the 61,360 area, and we may well overshoot that. Because this is called a negative CTKS gap. There is literally no structure inside this specific gap. There's nothing to stop price from coming down. If we start to pierce it, and it looks very probable that we will do so, that means that we could overshoot and head below 61,280. Knowing where the structure is vitally important. We're likely to overshoot this particular level just around that 61,400 and make our way down to the 61,000 before we get caught by any structure. These are not brick walls, they're elastic. So it's important to understand it just won't hit there and stop dead. Especially if there's a big gap, it's likely to overshoot and reflect backwards. However, that's just the bearish case. If we see the markets improving and we can get above this 62,500 level, we're going to grind our way through all of this structural overhead resistance. And that is what we want to see. But if we don't see it, at least you can be prepared and understand where the safety nets are on price action. We know that we can't just look at Bitcoin's gravitational pull, we need to compare it to total crypto market cap as well, because total levels will influence Bitcoin levels and vice versa. Are we sitting at a strong level of structural support, or are we under resistance? Where are the resistance levels? How far apart are they? Do we have some positive CTKS gaps, or are we under resistance and got a big way to fall down to structural support? How to answer this question? We just mark up our charts with level 1 and level 2 standard certification. Inside the service, this indicator will just give you the answers and save you literally so many hours on markups. What we can see, unfortunately, we're backside retesting a structural resistance level. This means that it's very likely that we're going to come down to the $2.101 trillion mark. We are likely to overshoot that, and this will act as a bit of a gravitational well. So even if we push down, we would expect to push back into this area. If the bears get follow through and the institutional selling gets more, we would expect a movement down to 2.082 trillion. That's the bearish case. Always consider that things can turn around, so always be prepared for either case. Technically, we should be prepared for 3 cases, a consolidation case as well. But let's just leave that off the menu for the time being. So if we're getting a positive case, we must take out this $2.125 trillion area, and that's around this area on your price charts. For example, if you're trading in Solana or Ethereum, just look for this level. As we take out this particular once resistance and confirm it as support, that means we get above that area, we could move up very quickly. Literally, everything depends on what happens to the VIX. If the VIX starts to retrace, that's fantastic. We're going to see a rally inside the crypto market. But if the VIX keeps on spiking, it will push everything down with it. It will raise the DXY, it will raise yields, it will lower gold, it will lower silver, and it's going to do all sorts of terrible things to the euro dollar and to the Aussie dollar, you name it. And of course, crypto can't escape the stock market's gravity. It will pull it down as well. Our key inside this community, we were born in the red days. We don't care about the red. We just came to life in the red. But of course, we just are very mindful that the red is by very nature terrifying. But we seek to do something pretty cool. We seek to buy on red. Buying on red is very, very important. You want to get onto the right side of the percentage. Basically, every single investor that you will ever meet says, I want to buy low and sell high. But the problem is, when price comes down to a lower level, they're basically saying, I don't know if this is the low. Could it be lower? I want to buy the bottom. A lot of people try to do that, but you can never really buy the bottom because you don't know where it is. And the truth is, nobody does. We do not know where the bottoms are, and we do not know where the tops are. All we can do is stack probabilities. By looking at structural levels, it places us ahead of the game because at least we know where the sellers are likely to inhabit. For example, on Solana's price action, around that 146.50 is an area where sellers will get very, very active. But between there, Solana could spike up if the VIX spikes down. Now, if the VIX spikes up, we would expect Solana to come down and test its lower structural levels, especially these ones around 141.20. At least you know where price can go and you know why it's going there. The question is, how concerned should we actually be? When the inverted VIX spikes, it just pulls the markets down with it. So we must be aware of these factors. When we look across the main markets, we saw China recently came into a good deal of red packet money, and that absolutely rallied the Chinese stock market. And we've seen a bit of a retracement. We know sharp angles tend to reverse. Unfortunately, they do. But unfortunately also, people tend to get attracted into these rallies and get burnt on the way down. When we look at other markets such as the UK is under a slight degree of pressure. Australia's market is still okay. It's still doing well. Japanese market looking pretty good. And when we look at the Dow and the Russell, they're still under support. Well, they're supported at the current time, as is the Nasdaq and also the S&P 500. And when we look at Bitcoin, that's also supported, and Taiwan's major index is also supported. One thing that's really good to remember, when the VIX did a heck of a spike because of the Japanese carry trade, we saw the major market indices just take a nosedive. And unfortunately, Russia's market kept on going. China's market turned around because there was so much stimulus. They were just trying to buy their way out of a very big problem, as governments do globally. But just think about this. If you were actually buying when the carry trade unwound, wow, you would have done so incredibly well. That is the way that you need to think about things. Please let me know in the comments if you've been doing your cheat sheet, you already knew that the VIX was way overextended and we could get into trouble. What do you think is going to happen to the VIX right now, or at least in the next trading session? Do you think it will come back and retrace, therefore rallying the major indices as well as the crypto space? Or do you think it's going to push upwards, thereby pushing negative momentum inside the markets and also crypto, and pushing the dollar up, pushing yields up, and pushing gold down? Please let me know your thoughts in the comments. It's really good to discuss this one through. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.